investors! Welcome back to InvestiChan. Today we're looking at Zoetis, the global leader in animal health. From pet medicines to livestock vaccines, Zoetis is a company that grows quietly, but very consistently. Let's see why this stock is so unique. Zoetis develops and sells medicines, vaccines, diagnostics, and even genetic tools for animals around the world. Their products cover both pets, mainly dogs and cats, and livestock like cattle, swine, and poultry. They operate in more than 45 countries, and their customers range from veterinarians to pet owners to large animal producers. It's a diversified, global business and extremely resilient. Zoetis splits its activity into two strong segments. First, companion animals, which is the fastest growing, driven by rising pet ownership and higher spending on pet health. Second, livestock, which provides stable recurring demand from food production. Together, these segments create a beautiful mix of growth and stability. Zoetis generates revenue across all major regions: the US, Europe, and emerging markets. This global diversification protects the company from local market fluctuations and keeps growth consistent worldwide. Here's the stock price over time. Zoetis is a classic compounder. Not explosive, but extremely stable, with long-term upward momentum thanks to strong fundamentals and recurring revenues. Revenue has grown steadily for years. The pet care market is booming, and spending on animal health continues to rise globally. Zoetis benefits directly from these long-term trends. Net income follows the same pattern. Strong, predictable growth. High margins and strong pricing power help. Zoetis converts sales into profits very efficiently. Free cash flow is excellent, one of the best parts of the Zoetis story. This cash funds innovation, acquisitions, and shareholder returns, all while keeping the balance sheet healthy. Zoetis enjoys top-tier operating margins in the animal health industry. This reflects their dominant market position and the essential nature of their products. Animal health is a high-margin business, and Zoetis leads it. EPS has climbed steadily over time, driven by growth, buybacks, and operational efficiency. It's exactly what you want to see in a long-term compounding company. Zoetis trades at a premium compared to the market, but that premium reflects its stability, high margins, and long-term growth visibility. It's not a bargain stock, it's a quality stock. Zoetis pays a dividend and increases it regularly. It's not a huge yield, but it's a nice bonus on top of long-term capital appreciation. Long-term debt is manageable and well covered by operating cash flow. Zoetis keeps a solid balance sheet, which gives them flexibility for research and acquisitions. Analysts are generally positive, with most ratings leaning toward buy. Why? Because the pet care industry keeps growing, livestock demand is ongoing, and Zoetis dominates both. Zoetis has three major strengths. First, they're the global leader in animal health, with over 20% market share. Second, the companion animal sector is booming, and Zoetis is perfectly positioned. And third, it's a high margin, recurring revenue business, the best type of model for stability. But there are weaknesses to keep in mind. Zoetis trades at a premium valuation, especially compared to other healthcare names. They depend heavily on veterinary channels and regulations around medicines, and the livestock segment can be affected by global cycles and farming economics. I am a shareholder of Zoetis. For me, this company is a long-term compounder. High margins, recurring demand, and global leadership. As long as the pet and livestock industries keep growing, and they will, Zoetis should continue performing. It's not a high volatility stock, but it's a very reliable one. This is not financial advice. Always do your own research before investing. Thanks for watching. Like, share, and subscribe for more weekly stock analyses. And tell me in the comments which company I should analyze next.